Hello folks, this is Vincent Virga, President of PFS Wealth Management Group with your July 2017 Educational Economic Update. In this video, we're going to talk about some of the economic headlines that have influenced the markets in June and give you some insight in what it could mean to you as an investor. But please stay tuned at the end for our required disclosure statement. Well, June 30th marked the final trading session not only of the month, but also for the first half of 2017. It's a period marked by strong stock market returns and exceptionally low volatility, although volatility returned the last week of June. See, markets alternated between gains and losses, with stocks plunging on June 27th and 29th, but surging on June 28th. Despite ongoing conflicts in Washington, Wall Street is still in a rally mode. The S&P 500 had its best start since 2013, and NASDAQ marked the strongest first half of the year since 2009. Stocks have been lifted by the sense that other global economies, particularly in Europe, are starting to stabilize. Not all stocks have risen though. You see, the S&P 500 telecommunications sector, which includes phone and internet providers, as well as the energy sector, including oil and gas companies, are both down. Our economy slowed less in the first quarter than initially anticipated because of unexpectedly higher consumer spending and the bigger jump in exports. The U.S. gross domestic product, which is the total value of goods produced and services provided in the country during 1 year, increased at a 1.4% annual rate. It is still the lowest growth rate since the second quarter of 2016. Job growth has been steady, and consumers are feeling better about their ability to pay their bills, take trips, and cover other expenses. Consumer confidence rose in June from May, and experts say conditions are good for economic growth to continue. Americans' personal income soared in June, but that extra cash unfortunately didn't seem to prompt consumers into spending it. Personal consumption expenditures, or PCEs, only gained 0.1% for June. It's the worst showing since February. Spending rebounded in March and April after starting the year on a soft note, but the latest reports suggest consumers are being frugal once again despite pay increases. What can we expect from the markets over the next 6 months? Well, looking into the second half of 2017, our analysts believe it is unlikely that low volatility will persist indefinitely. Investors may need to brace for more big swing ups and big swing downs in the coming months. Wall Street will be focused on whether corporate earnings can continue rising at a healthy pace despite what is going on in Washington and around the globe. Wall Street professionals, they say the best days of the stock market may very well have occurred already. What might stall future gains is the market that has become too expensive, political gridlock, and potentially slow-growing economy, and worries about top-performing tech stocks cooling off. There's also a feeling that the market's fast start has stolen from some of the gains that might have come later this year. Interestingly, though, consumer attitudes hit the lowest level since November 2016. Economists expect the measure of consumer attitudes to fall even more in the coming months. See, consumer attitudes soared in June as U.S. consumer sentiment slid to a 7-month low, though still rising slightly above economists' expectation and still holding historical highs in the first half of 2017. Ladies and gentlemen, I hope you've enjoyed our July Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number you see below. We'll see you again in August. Once again, this is Vince Virga, President of PFS Wealth Management Group, signing off for the month of July 2017. See you next month and enjoy the rest of your summer.